Hey everyone, so today I'm going to show you a little bit about credit spreads and how they work in a down market, especially short put spreads. I recently took a trade in Euro FX futures options market, and I'll show you exactly how I made about maybe 18%, 17% in 5 days. Just by being a contrarian in the market, that's how I normally trade. And the idea of this video is just to show you which strikes I picked, which expiration cycle, and what did I actually do to finish that trade, initiate that trade, and what plans did I have to actually manage the risk in that position. Meaning if the trade would have gone against us, what would we have done in order to make sure to damage control the P&L of this trade. So first I wanted to show you the Fed. There's a rate meeting coming up on December 10th. It's about 5 days out, and the probability of a rate cut is about 87% right now. So what this means is the Fed is expected to cut, and you can see that here. This is the CME FedWatch tool available publicly out there. You can just go out and check it out. Meaning the Fed is about 87% probable to cut the rate by 25 basis points. And when I say 25 basis points, you can see this bar, it's 87.2, and the range for this number is 350 to 375. Now that range is currently trading at, the current range is here. It says 375 to 400, which means this will be dropped by 25 basis points. There's an 87% chance of that happening. When the US rate goes down, which it means the currency pair against us will go up, meaning if you were trading a Euro USD trade, if the US rate goes down, the Euro number will go up. For that reason, I'll show you how the market has taken this news. So recently, in the last few days, last few weeks, the market has actually stayed stable, but on the upward trend, given that the probability of a rate cut is higher than previous months of the Fed cycle or the Fed meetings. Now let's go back into our trade and then see what we did, to make some money out of this Euro USD higher volatility market. I traded this on 11/20, which was November 20th. At that point, the market was up quite a bit. The volatility was actually higher. It was around this range, and today the volatility has actually dropped. Probably because people have already priced in this rate cut, and then everything is priced in. It's business as usual. People are now taking their positions in order to, rebalance their portfolios now that the rate cut will happen. That's what they're saying. 87% chance of that happening. Okay. So first thing I looked at on 11/20, which was maybe 15 days ago. So this video is just for education purposes because I wanted to show you how I did it and what I did and what strikes I selected. So a little bit about the Euro USD futures trade as well. The Euro USD futures market, the specs, what do you need to know? So you can go on the CME website and then look at all the open interest and live volume and everything. This should match everything on your platform, and I can show you that. The volume in this contract, which is Z5, and you can go in the calendar and then see which is the Z5 contract. Come down here and you can just see, find the number Z5, and this is here. It's a December contract. It will expire this month, okay? The settlement is 15th of December. So I want to show you some specs. How does the Euro USD market works? And it basically works around $125,000 units. So each contract is worth 125,000 euros. So when you trade options, all you need to do is multiply your premium. This is the simplest way of putting it. Multiply your premium that you collect by 125,000, and I'll show you on that screen in a minute. But one more thing I want you to look at is every single tick will be worth $6.25. That's the incremental price of this euro contract. $6.25 is how much this contract ticks. Every tick will be worth $6.25, either up or down, depending on how the market goes. Okay, let's get back to the trade now. So the trade was 11/20th. I took a trade. My strikes were 114, 113. What was the price on that day? It was actually around the bottom of it, 114. Keep an eye on the date at the bottom here. If I hover over on 11/20, the price was around 114, slightly higher than 114. Okay, so because the market was down, I took a bullish trade. So when the markets are down, you have to take, as a contrarian, that's what I do. I took a bullish trade. So this was a credit put spread. We traded short puts in a spread form. Okay, we normally just trade put spread in order to contain our risk, and we know exactly how much our max profit is, max risk is, and all that kind of stuff. So when the market was down, I took a short put spread, and then I selected my strikes. It was this same contract, I believe, back then. It had maybe about just over 52 days left in the contract. So my go-to is basically 17 delta. So the 114 strike was trading at 17 delta at the time. I short put it. I took the short strike at 114, and my regular width of the spread in the euro currency market is just 1 point. So my buy was at 113. Okay, so the short put was at 114. The buy leg was at 113. That's how the spread was constructed. But keep in mind, the short 114 strike was at 17 delta at the time, and then the long one was probably at, I would say, maybe 10 or slightly over, maybe 12. Okay, the trade would have done even better right now if you would have just left it on, but I'll tell you the reason why I took it off. Okay, so let's get back into the trade. These were the strikes selected all the way through, and then I got filled at 14 ticks. You see that here? 0.0014. This is the tick size I got. the max premium I collected for this trade on the day off, one contract only, this is what I got, 0.0014. Now, how is that converted into dollars? So 0.0014, all you need to do is multiply this by 125,000. So I collected $175 in this trade. 5 days gone by, and then I took it off, actually 6 days. So 6 days went by, and then I took it off. I put a buyback order in for 8 ticks. Now, how much is 8 ticks? Again, what all you need to do is I sold it for 0.0014 minus bought it back by 0.0008. So I collected 6 ticks in this trade, and I just have to multiply this by 125,000. Now I collected $75, a little less than 50%. I normally go for 50%, but because the market was so volatile, I thought about closing the trade and then redeploying capital somewhere else where the volatility was still up. So I collected $75 minus the commissions I paid, about $15 round trip. So go in and out. Going in is about $7.50. Going out is about $7.50. So net, we took home $60 from this trade. But here's the magic: we did not put anywhere more than $325 to initiate this trade. And that's if you have more than 45 days in the expiration cycle. Any of these futures market, well, most of these futures market, the max amount of money that you need to put down to initiate the trade is about $300 to $350, depending on which market you're trading. But the Euro market is the most efficient I've seen, and we made about 18% in 6 days. Now, again, if you annualize this number, you can keep doing this every month. Whenever there's an opportunity, this is a good amount of recurring passive income that you can collect from this kind of trading. And then we just bought it back at 8 cents, and that's how the trade went. Now, futures option markets have been really good to us. Those are the ones that I usually trade. I don't trade indices or anything else because there's max leverage. Your capital is very, very efficient trading in the futures options market. And I can show you a comparison of doing the same thing in a ETF, a stock, a futures options, or an index. It's the exact same exposure you're getting, but here in this market, you are only paying down 1/3 of the cost of that you're paying anywhere else. So that's why we trade these markets more often. And if you like this kind of stuff, I also run a 5-day option trading challenge in which I cover all these kind of things. The next one is in 10 days. It's 100% money back guarantee. So all you need to do is just send me an email if you don't like anything, and I'll return all your money back. If within these 5 days, we will set our foundations. We will go through some cash secured puts, which are the most basic ones, and then we will go on to the spreads and classic iron counters. And then I'll go on the 5th day. I'll show you my exact framework of trading successfully the zero DTE market. If you look at my channel, I've done a lot of videos on the zero DTE market, how I've been trading successfully for the last so many years. So go there. It's $150 for each ticket, and it's 100% money back. Yeah, just take a look, and if you like it, just sign up for the next one. Spots are very limited, so I advise you to look at it right away if you can. Thank you very much for watching, and I'll see you in the next one. Bye.